Tuesday, July 14th, 2020, Monaco 64, home of alternative economics and contrarian views. So the UK economy continues to collapse. I personally think this has all been done by design. It's a non-crisis, as Lindsay Williams called the oil crisis of the 1970s, the energy non-crisis. I highly recommend this book. He talks about, for example, when he was out west on a ranch where a pipeline went through in 1972 or 73. He asked the rancher, why have the oil companies shut down the flow of oil from the west coast to the east coast? And he said, well, the government told us to do it. They don't want the oil going to the east coast. And most of us think that it was because of the oil countries, the Arab OPEC countries imposing their embargo. We blamed it. I remember I was about 10 or 11 at the time. We blamed everything on the OPEC Arab countries. But if you read this book, you find out that it was more than that. It was a planned crisis, oil non-crisis, to put the world on a petrodollar system. And I would say the same thing about this crisis nowadays. We're blaming China, but we're all in it together, so to speak. I hate that term. But so to top it all off for the UK economy, I'm going to focus on that. They announced yesterday, the UK, government, if you want to call it that from the 24th of July, people will be obliged, or it will be mandatory, to wear masks or a face covering in all the shops in England. I think it's already mandatory in Scotland and other places. So I think that's going to hurt the economy even more. People are going to try to avoid shopping as much as possible. I think there's a lot of, or a silent majority out there that are not happy with this. They will do the minimum that they have to. They'll probably just go to shop for food. There will be a £50 fine if you're caught not wearing a mask in a supermarket or in a shop. I think in the supermarkets, the security are not probably going to let you in. It says that only the police can enforce the fine, so staff can't do it. You could argue that security in a supermarket is not police, but I'm sure they're going to be very aggressive. So yeah, you can pay the fine, but every time you go to the shop, it's going to cost you £50. They're going to extort £50 from you unless you do as you're told. So I go back to Benjamin Franklin. He said once, those who give up essential liberty to purchase a little temporary safety deserve neither liberty nor safety. I find it interesting that we still have 10 days until this starts. This might not even, I think, be implemented. Who knows? I think there are a lot of people who are upset about this here in England, at least. Not sure about what's happening in Scotland. I know the fine there is £60. So anyway, let's look at the data we had this morning. It's GDP. So as you can see here, GDP on a 3-monthly basis dropped almost 20%, 19.1% for the month of July. As you can see here, it was expected to drop 17.4%. You can see here that for June, it dropped 10.4%, and for May, it dropped 2%. It's not getting any better. And I think this is going to also, this new rule about face coverings is not going to help the UK economy. UK economy is heavily based on services, on travel, on restaurants, on events. I think it's really going to hurt this economy. And with that, I wanted to talk about a couple of articles actually I saw yesterday. One of them is a warning sign for me. Well, not for me, but I would say people need to be aware of this. It says nationwide returns to high risk mortgages. UK home loan provider responds to pent up demand as coronavirus lockdown is eased. I don't think this is being eased. Yeah, the crisis has kind of almost disappeared. There's no more, very little cases or deaths here in the UK. I mean, 1.3 million people die of car crashes around the world each year. But we're still supposed to maintain all the rules, social distancing, and we're supposed to wear a mask now 4 months after the thing started, and we weren't wearing masks during the lockdown when the cases were dropped. It doesn't make sense, right? But so I think Nationwide is not aware of the program. And what is the program? Well, I highly recommend an article I wrote for my blog, maneko64.net. I do have a blog. I write on that blog once in a while. It's not very regular, but I wrote something on the 11th of June, the origins of the World Economic Forum, and how this is the Davos man. You need to read this. This is who's behind this non-crisis, in my opinion. They want to bring in their fourth industrial revolution. Even Prince Charles, the Queen's son, is involved in this. And they're part of also the Bilderberg, the big corporations, big media, big politics. These people meet every year, not only at Davos in Switzerland, but also in the Bilderberg meetings. They get all the big corporations on their side. They set the agenda. And have you ever wondered why it goes ahead? Well, because the big corporations who control our economy, they're in on it with this program, and that's why they can implement these things. So it's going to be hard, but I think if enough people say enough is enough, maybe they won't succeed with this. But I think their plan is to bring in a second wave, and it's going to make it even worse for the economy. So read this article if you can. I'm going to put a link below in the description to my blog, so you can read this article. It's very enlightening to see who's really behind all this this crisis, I would say, this engineered crisis. And they're really going for it now because they've already gone so deep into it. They have to keep going. This is worrying. It's like luring people who don't know what's going to happen to the economy into taking a lot of risk and debt. It says Britain's second largest home loan provider will offer an unlimited number of 90% loan-to-value mortgages to first-time buyers from Monday, Chief Executive Joe Garner told the Financial Times. The decision, far sooner than expected, will help younger borrowers who rely on low deposit loans to help them get on the housing ladder. So they want you to get on the hamster wheel. These young people will probably have even more debt, like student debt, student loans, credit card debt. So they want to keep them on the hamster wheel, on the treadmill, going nowhere, just getting the bankers even richer. And that's why I say boycott this system. Yeah, rent or maybe live with your parents if they don't mind. There is nothing wrong with it. Live with your parents. And if you still have your job in a few months' time, keep saving as much as possible. And then maybe think about buying a house. It also marks a sign that the UK government and regulators attempt to stimulate the economy they're not doing a really great job of stimulating the economy with all the fear they're putting into people. Not only fear, but a lot of us see through this plan. So there's like a mixture of things, and it's not going to help pick up the economy. Are gaining traction after historic gross domestic product plunges and job losses since March. Well, this was published yesterday. the gross domestic product plunges are continuing, right? And I think they will continue. While there was zero pressure from the government to re-enter the market, the Bank of England said, keep lending. It'll be better for everyone. So that's the Bank of England. So now I'll go to another article that came out yesterday. And this is from the Bank of England. And it's coming out of the other side of their mouth. On one side, they're saying, keep lending to the sheeple, right? And on the other side, Andrew Bailey is saying, Bank of England's Andrew Bailey says he's very worried about jobs. This article is in City AM. Bank of England Governor Andrew Bailey has said the UK economy is showing signs of recovery from the corona. He calls it a coronavirus crash. It wasn't the coronavirus. It was because they locked the economy down, right? But he remains worried about unemployment. So this is what he said. We are seeing the economy come back now somewhat, because obviously the restrictions are beginning to be lifted. But there's a long way to go. We are very worried about jobs, as are a lot of people. Yeah, the Bank of England is pushing nationwide to lend. And on the other side, they're saying we are very worried about unemployment. When they say they're very worried, it means that it's happening. They always underestimate things, or they cover things up, these policymakers. So there you go. And I don't think it's going to get any better. I think a lot of people are going to boycott the high street. I saw a tweet yesterday. Someone said, rest in peace, UK High Street, 24th of July 2020. Well, the 24th is the day when you will be obliged, or it will be mandated that you wear a mask in every shop in England. Yeah, it will push a lot of people to do online shopping, but I think it's just going to put a lot of people off of the experience of shopping, if you can call it that. I mean, if you go to a shopping center, let's say Blue Water, and you spend 3 hours there walking around, going into the shops, even if you don't buy that much, you go to a restaurant. But am I going to do that now if I'm going to have to wear something on my face for 3 hours? No, definitely not. So there goes Blue Water, I would say, at least for me, and I think for a lot of people. So let's go and see where the markets are this morning. It's 7:45 a.m. It was a very interesting day in the markets yesterday. The Dow finished almost 600 points off its highs. It finished up only 10 points. S&P as well finished almost 100 points from its highs, about 80 points off the highs, and it finished down 30 points. And the NASDAQ finished, almost 500 points from its highs and finished down 226 points, or 2.13%. It's difficult, I guess, right now not to look at Tesla. And yeah, it was a interesting move yesterday. We got above $1,800 per share. And just remember that this stock was below 400 at the bottom in March. And yesterday it went up to 1,800. As you can see here by this chart, we've come back down. So is the top in? I don't want to guess. I guess the shorts and the bears have been decimated by being short this stock. But there is an old saying about technicals and charts that gaps are always there to be filled. There's a gap as well, the end of June, around 1,200. So this stock is very dangerous. I wouldn't get involved. It's a massive bubble, I would say. It's irrational. Anyway, so yeah, not a very good price action for the stock markets yesterday. Some people are attributing it to comments from the Dallas Private Federal Reserve President Kaplan, and it is a private corporation, the Dallas Fed. He said that all these programs that the Fed has instituted since the collapse in March, they're going to phase it out as the economy improves. Well, I don't think there's a chance in hell that they'll be able to do that without creating another crisis. This is just like Yellen back a few years ago saying that doing the quantitative tightening was going to be as boring as watching paint dry. So the central bankers, they're just trying to control investors' perception that they're not really gone crazy, which they have, and that they are really frugal and that they're not reckless. But I think that the course they've taken, it will be impossible unless they really want to bring everything down and collapse everything and create a deflationary collapse. And some people would say, well, do you really want to hold gold and silver when that happens? Well, gold did very well during the Great Depression in the 30s when there was the last deflationary collapse. And by deflation, I mean the shrinkage, the collapse of the money supply. I don't mean low prices of CPI or measures of CPI. Yeah, gold, precious metals perform well on either side of monetary mayhem, hyperinflation or collapse, because there's no counterparty risk. If you hold on to paper assets in a deflationary collapse, you're going to be left holding the bag. There's going to be a lot of bankruptcies. So I'm not concerned about precious metals. Plus, it's almost like a moral stand, I would say. I don't want to finance the people that want to keep you on this treadmill, on this hamster wheel of debt. The same people who are in charge of this crisis, right, who want to bring about their fourth industrial revolution. So there you go. Let's just see where we are then this morning. Yes, silver did very well yesterday. We got up to 1940. But I still think we're climbing a wall of worry. So we've come back down, of course. After the stock market dropped yesterday, they sold off the precious metals. Right now, gold is at just above 1,800, down $1.50. Range has been 17.95 to 18.06. Silver is down about 3.5 cents at 19.03. Range has been 18.92 to 19.16. I was speaking about copper yesterday. It's come off a little bit, copper here. It's down 1%. This is high-grade copper at 292. The Dow is up 129 points. The Dow future up 0.5%. S&P is up 0.5% as well. And the NASDAQ 100 future is up about 7/8%. Sterling was hit hard yesterday, late on yesterday. It came off about 0.5%, which in fiat currencies during the day is a relatively big move. It's continued to come off here. We're down 0.15% at 125.36. The euro is still fairly firm, 113.44, unchanged though overnight. And the dollar is unchanged versus the yen at 107.31. Dollar's up a little bit against the yuan at 7.01. WTI still hovering around that 40 level. We're at 39.77, down 1%. To finish off, the 10-year yield is down 1 basis point at 0.63, so still fairly quiet. The bond market, I don't think this crisis is anywhere near being over, especially here in the UK and in Western Europe. The economies are going to continue to melt down, maybe not at such a fast pace as we've seen in the last 3 months. but it's not going to get better. And, these people, they have to keep this crisis going because it's the only way they can implement their agenda, bring in all the things that you probably know about. I'm not going to talk about it here, and other people cover this a lot more than I do, but it's got to do with something that they put on you, right? And yeah, if they stop right now and say, well, it's all gone, there's no more problem, they won't be able to bring in their agenda. And that's why you need to read that article that I wrote back in the beginning of June. It tells you who's behind this. And I've been reading about these people for many years. I might not talk too much about them here because I'm trying to warn you through the economic and monetary and financial side, because I feel that if you have some financial sovereignty, it will help you remain as free as possible, even though it's getting harder and harder to do that. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, and all these other platforms below here. I wish you all a great day. Take care. Bye.